If they're accretive, fine. If they're dilutive, not great. How do you approach the issue?
I approach it that it's really just, it's another form of capital allocation. And it's really a test of how good the management is or is not. And, investors want to know that the capital is being, put somewhere. And the reality is it's just another form of investing. I mean, that's what buybacks are. And you want to be in companies that are doing it with good cash flow and that have good balance sheets and can actually have looked around and they really do feel that's a good use of their money. I mean, look, I have some companies in the model portfolio of one of my newsletters. And when they say, investors are pushing them to do buybacks, and the companies will say, hey, look, we've got a lot of money. We're generating a lot of cash, but we have a priority list. Buybacks are at the bottom. I love seeing that. But then there are other companies that just historically keep buying back stock. Their stocks have not maybe done very well. They're just like they're just, they're static. And, that's a great use of cash. I mean, there's a company I like. I've mentioned it here in the past, Allison Transmission. They went back over 50% of their stock over the past 10 years. I mean, they're like taking themselves private. Boring as heck company.
So, Herb, your view of buybacks is rather more benign than that of some critics of buybacks, some of whom would say that it is a convenient way for managements to restrict, compress, contract the share float, and thereby, in part, artfully manage EPS, to which often, not only stock price, but to which often executive compensation is tied. How do you answer those who say this is really financial engineering?
Yeah, don't confuse financial engineering with sound financial management, because for some companies, you could say that could be whittled down to really one question. Does the share repurchase create value for shareholders? And, if a company's buying back stock purely to offset options that are being exercised, I wouldn't, that's an issue. But if they're doing it because it is the best use, and yes, they're basically giving you a bigger share of the company. So what's the problem? I don't see the problem with that, Tyler. And as I looked at it back when I was somewhat of a critic, it was an easy mark. And now when I look at the politicians, and the politicians are saying this is, it's an easy scapegoat. I would say that when I looked at the State of the Union address, and by the way, I tilt left, so this is not a political statement. When I looked at the State of the Union address, and everybody was cheering when Biden was talking about, let's get rid of those buybacks, let's tax those buybacks, let's put a quadruple tax. I thought, how many of those people even know what a buyback is? And, because that many don't.
So, Herb,
and it's,
if they raise it from 1% to something much higher, 5-10%, what is the net impact going to be on the stock market, do you think?
Well, assuming it goes through, which it probably won't. But what would I don't know what the net impact would be. I would suspect that some companies might pull back, but the stock market, I hope the stock market is tied to much more than buybacks. Again, companies that do buybacks the right way and can afford them, that's good for that company. I'm most interested in the company, not the market. So I know that's a sort of my way to wiggle out of that question. But I think you have to look at each company independently, because this is not a one-size-fits-all.
Sure. So take your favorite one. What would the companies do where buybacks were suddenly costlier? Would they turn back to dividends? What would they do?
Yeah, they could end up paying, this company pays a dividend. They could pay a bigger dividend. Of course, that's more of a tax hit on investors. Ultimately, they're going to pay tax on that. Some investors would prefer dividends. There's a mix. I like to see some companies that do both buybacks and dividends. So, what will a company do? Hopefully it won't set that cash afire by doing something stupid.
Raise executive pay. You can think if you need to,
right.
If you've got some, yeah, go ahead.
And that's the other thing. When you see people talking about it, it's a way to, for management to enhance its own wealth. It's actually a way for, again, in many companies, for management to enhance shareholder wealth. Because remember, it's about all shareholders in that case. And by the way, if you look at compensation and you look at how management is compensated, you don't want to see just earnings per share as a bonus structure for the bonus structures. One metric, earnings per share. That's horrible. That's horrific. That's not a good thing. But it's easy to point a finger at it. It's another thing to actually go in and do the work and understand, how management is compensated for that specific company and how management is done, how the performance is. And again, I come back to, is this a company that's generating a lot of cash and that has a really solid balance sheet?
Right.
It really boils down to that.
Right. Herb, appreciate you joining us today.